What's going on, guys? So emergency video. Obviously, everything I've been telling you guys is basically happening, and I told you guys that this week was going to be pivotal to see if the flows of this week was enough to push us back up, and if not, most likely would mean that this correction would most likely continue for another 5% drop. So today the S&P 500 is basically decided to jump out of a window. We at one point we were down at more than 3% for the day. And obviously stocks have just been murdered. Nvidia is down 5%, Palantir 10%, Robinhood almost 20% in one day. And it's a great company, by the way. It's going to be a great opportunity to buy the dip. My point is, a lot of stocks are down between 10 to 20% in one single trading day. Obviously the market is closed right now, so I wanted to update you guys on some really bad news. So I wanted to start this analysis by showing you the monthly time frame, and something really bearish just happened today in the S&P 500. So down here, this is the momentum indicator. I like to use the 10 and 20 settings to have more leading indication of market momentum. And right now, guys, we just crossed right here, guys, on the monthly time frame. This is by far like the worst signal you can possibly have, bigger picture in the market. Obviously, when we triggered basically a bullish trend right here, the trend kept going up for 2 years. So this is a very good indication of the type of market environment we're in. So obviously we're gonna have to let that month close for the MACD to confirm, but this is like really not good. I also got stopped out from Bitcoin, by the way, guys. So I showed you my stop for Bitcoin. It's basically the same. It's the MACD on the monthly. It just crossed. When that happens, I'll talk about it in the next coming minutes right after. It's never a good sign. It's a sign that, we're entering a pretty severe bear market. I hope I'm wrong, and I hope you guys can clown me in 3 months. And so, yeah, basically Bitcoin, guys, is cooked in my humble opinion. I mean, this is basically my stop being triggered. It's about to cross 1 month. And the problem is, if you wait right now, we could, be at 70,000 before it actually triggers. Obviously, it's on the monthly time frame, so it's a little bit slow. Then if I just change the length of the signal to make it a little bit faster, guys, this is why I'm basically out of almost everything. Well, it already crossed right here on the volume weighted MACD, so that is the stop right there, guys. For me, when it comes to crypto, I was buying 2023. I'm extremely disappointed, but I gotta respect my stop, and that's my stop. And then for me also, it's combining that with just the broad market. It's not looking good. So going back to my point for the S&P 500, I wanted to show you guys how similar the top we're having is with the 2022 top, which is pretty crazy. So you can see that right here, we top at the upper smart layer right here, which is the purple line, and we did the exact same thing here, guys, for this cycle. If this was the top, which is most likely based on these new indicators I've been coding with AI that have been extremely accurate. You can go back also here, never a good time to be chasing the market when we're close to that purple line. That was the COVID crash, right? So it's not perfect, but it's very accurate. Kind of just telling you, where we are in the broad market. And you can see that in 2023, when we actually bottomed, we bottomed in this zone right here in between those two smart layers. And so right now, if history repeats itself, we should most likely bottom somewhere in these smart layers as well. So now on the short term, sure, we could have a bounce, but I just wanted to show you guys the similarity between the past 2022 top and what could most likely be a top right here for the S&P 500. Also, that blue line right here, that's the 200 simple moving average of the daily time frame. And you can see as well, right? We topped here, and then we broke that moving average while the MACD on the monthly crossed and confirmed that we were entering a risk off market. So obviously, if that happens, any type of risk assets like Bitcoin, Solana, which I love, I'm still bullish long term, Tesla, everything is basically gonna get murdered. I hope I'm wrong. As I said, hopefully you guys can clown me, but for now, I'm really not liking what I'm seeing right now. And it's so similar, it's actually pretty frightening. Then I also wanted to show the similarity between sector rotation, which is one of the big reasons why I told you guys to be very cautious, thinking you're buying the dip. Right now, you could see that in 2022, when we topped, the exact same pattern happened, guys. You had the 3 biggest, most important sector, in my humble opinion, to tell you the strength of the market. Number one is semiconductors. It started going sideways for a couple of months. but the S&P 500 continued slowly grinding a little bit higher until it rolled over to catch up with semis. The same happened to tech here. You can see that it basically went flat, a little bit higher, but it was pretty flat before the S&P 500 rolled over. That's exactly what's going on right here. We're flat. Semis are also going down for months now. And the biggest tell sign obviously is going to be the consumer sector. And you can see this is very violent. This basically means that institutions have been massively rotating out of cyclical stocks since the end of January, when the market was still at a top. When I was basically telling you guys that based on probability, it made no sense to be all in the market for long-term portfolios, and that it was a better risk-reward return to start taking 10 to 20% minimum and to keep it in cash. So hopefully you guys took a little bit off the table. If you're being hurt right now, you're not the only one. I have a lot of cash. I'm over 50% by the way now, because of everything I just explained, which is not the type of thing you want to see in the market. This is like the violent of debt right here, where you just want to go on vacation for a couple of months and then come back, and then it's going to be a great time to get back in. And to be clear, you should expect a lot of volatility, guys. So now I'm just going to show you guys the cyclical defensive ratio as well. That shows you where institutions are parking their money. Are they investing the money in cyclical stocks, meaning they're bullish the economy, or in defensive stocks, basically betting against the economy? And you can see, I told you guys in my last video right here, I mean, this is a huge drop, guys. That is massive. It started, end of January, actually. 25, it started right here. End of January, they just started dumping. If I put a trend line right here, you'll see that right here, when you start seeing these sharp corrections, it starts basically the beginning of a top. And right now, if you look at the moving average that I like to use right here, I'm still waiting for them to cross. But man, if those moving averages right here cross, which I do expect in the next coming weeks, I mean, yeah, we could enter a small bear market. Right now, in my humble opinion, I still think we're in a correction, but I could be wrong. I've been pretty spot on, but I had some bad calls. One of my worst calls was, obviously, I thought that some horses were going to be very bullish this year, like Tesla and Bitcoin. Obviously, I was wrong on that, and I was correct on the rest, which I was quite bearish on just the rest of the market. I thought that the rest of the market would basically go nowhere, and then we'd have just some big corrections. And my base case for 2025 was 5 to 6% to the upside at the end of the year after big whipsaws. But, I could be wrong. We could enter a bear market. And that is kind of what some of these big signals I like to look at to know the environment we're in is starting to suggest. And it kind of sucks, but at least, just survive. Don't get wrecked. Obviously, it's not looking good. And in the same time, I just wanted to show you guys my new indicators that I'm going to be giving away for free as well to you guys in the next coming months. Hopefully I'm able to do that at the beginning of the bear market, so we can really make a lot of money and you guys can take advantage of it. So the first indicator I wanted to show you guys is obviously this smart layer model, which basically calculates support based on the weekly close of candles. So it's extremely accurate basically, and it shows you extremely strong support. And right now, as you guys can see, the next support is going to be 512 on the SPY for the S&P 500. And then in my humble opinion, I think that the worst case scenario, we could go, right here on this support right here, that would be about 454, 455 for the SPY, the S&P 500. First target obviously is going to be 512 right here. And and then afterwards, I do believe that will be the bottom, and then we'll have a massive recovery. So hopefully I'm correct on that. I hope I'm wrong that, this market kind of at least has a bounce, on the short term. That's kind of my call. I'm expecting a nice V-shaped recovery, kind of like what happened here actually, like a very nice bounce to make everyone think we're back basically in a bullish momentum. But I just showed you on the monthly, it's not, guys. So I would be very careful. And then I believe it's just gonna fade away, and then we'll go and hit these levels. And anyways, if you guys remember, based on the presidential cycle that I like to trade and talk about. And I told you guys that that was kind of my bigger picture thesis, that we're gonna bottom somewhere in 2026 and we were gonna have a bear market. So I was already expecting one. I was not expecting it to start this early though. So hopefully, we do have that bounce and then it gets pushed away a little bit. That would be nice. It would give us all a second opportunity, most likely to exit and take a little bit more profit as well. So hopefully that does happen. It would kind of suck if we just have like a straight flush down. I don't think that's likely. I think that's less than 16% probability, but you never know, especially with all the uncertainty that we're seeing right now in the markets. That's not my base case. That's like the worst case scenario. So just to be clear, I'm not seeing that happen, but I do see this scenario right here happen, just like basically in 2022. And yeah, we're basically just copying everything. And I was myself just expecting a bear market anyways. Regardless who won the election, it doesn't matter. It was going to happen. So hopefully you find some value with that smart layer model that I will be giving for free. It's extremely accurate at just calculating for you the real support and resistance based on the weekly time frame. And the second, which is even cooler, is called the DCA Smart. And so what's cool about the DCA Smart indicator is you can basically tell it what type of investor you are. Are you neutral, aggressive, or conservative? And then it's basically going to move this moving average for you based on the type of investor you are. And then what's cool about it too is that you can then move this line right here to tell it when you want to start the dollar cost average in the market. So you can see that it's going to start telling you when to buy. And these were all entries. And you can see that it optimizes your entry for you to make the most money during the bear market. And that's basically, what should be your goal when entering this bear market. And then you can see on this label, basically calculates everything for you, like your average buy, how much it would have cost you out of your account, your brokerage account, then how much money you would have made, your P&L, and then your net return in percentage. You would have made 57.75% return even after this big drop we just had in the S&P 500. All right, so it just shows you the power of DCA, especially when you're DCAing in a bear market. And then you just can move this line and it's basically gonna give you really good entries, and you can just follow it as a systematic system to dollar cost average for long-term portfolios. So this is definitely a tool that I wish I had, and I will be giving it 100% for free to you guys. You'll just have to give me your TradingView username and I'll be able to give you access in the next coming months. And then I also wanted to point one last thing with this DCA, DCA indicator, right? So obviously right now, if we go on the daily time frame, it is basically flashing some buy signals, right? But obviously when you're dollar cost averaging, as I said, when you want to optimize that type of strategy, it's really when you're entering midway in the bear market, guys, and in the early bull, right? When you're slowly going back up. Right now, that's kind of the problem, is we're kind of here, right here. So yeah, sure, you could start dollar cost averaging right now, but most likely if we do go lower, you'll have less of a good average. So then obviously what you can do is go back in the setting of the DCA Smart, and then you can change the investor style to neutral to have a little bit less signal. But then again, right, even here, it's basically telling you to buy the dip, and it could be correct, right? So obviously that's going to depend on, where you think we are in the market. Me personally, right, even though right now it's flashing a buy signal, I'm not buying. The reason why is obviously I just showed you that based on the monthly time frame, we just basically entered a risk off period. So you're basically like buying here, in my humble opinion. I hope I'm wrong. That's it, guys. So hopefully you survive this. It sucks. Everyone's getting wrecked. Just have some cash and be patient and have the good tools to get back in this market, which I will be giving to you guys in the next coming months, hopefully. And yeah, just subscribe, and it's all going to be free, by the way. I'm not going to charge anything. So God bless you. Stay blessed and have a beautiful day. Bye-bye.